8th day of December 2025. I wanted us to listen to some of the leaders that have been speaking about the price of the shares, or the cost of the shares, or is it the price? The worth that the government is selling these shares at. Let's listen to what they said yesterday.
Sasa share moja imeuzwa 34 shillings, whereas the real value is 70 to 80 shillings. So the country is losing about 250 billion.
And we know that as they try to sell this parastatal without public participation, which is a constitutional requirement, it is simply because somebody somewhere wants a cut.
It's like you have a cow that is high yielder in your home. Hiyo ng'ombe ndio inatoa maziwa, watoto wanakunywa, wewe unakunywa, ingine unauza. Sasa wewe unauza hiyo ng'ombe na una ingine, ati ununue chakula ya siku hiyo.
The people who represented the government in this deal, probably some of them are actually not government employees. And some of them we are not contracted to negotiate on behalf of government. And maybe even those people, there are things they do with the buyers.
We must liberate this country. Sindio? Otherwise, the way things are going, all national institutions are being sold. Everything has gone haywire. Theft, left, right, and center.
And the financial analysis continues from whichever perspective you like. Churchill, let's talk about, because if you look at the structure of shareholding within Safaricom, like you were saying, currently government holding 35%, the Vodafone, it's 39.9 or thereabout, almost 40% of the share, and then 25% is what is being held by individuals and members of the public, and institutions rather, meaning that it's only 25% that is in the stock market. But then you're using the price of shares in the stock market to determine whether 34 shillings is a premium or not. Is that fair, to use the price of what is in the market to determine the price of what is not on offer?
Yeah, for sure. And in as much as 75%, the government stake, 35%, and close to 40% stake by Vodafone Kenya is illiquid, it doesn't trade. But the price or the market capitalization, we call it market capitalization. So essentially looking at the number of shares of Safaricom, in this case that is 40 billion, and then multiplying it by the price where it is trading in the market. As of close of last week, it was 28 shillings and 70 cents. And even before this transaction, because the news about this transaction came on Wednesday evening, at the close of that day, the price of Safaricom was 28 shillings and 20 cents. That was the close of the price. And here, and this is how we need to phrase it, you can look at it as a chicken or egg situation, but essentially the transaction is Vodacom is proposing to buy the 15% stake that GOK holds out of the 35%. Right. So that is the phrasing of it. It's not the other way around. Okay, we may look at it the other way around, but essentially it's Vodacom proposing to buy 15% of government of Kenya's stake in Safaricom. And if you look at the price of Safaricom over the last, you can go from its IPO. It started trading at 5 shillings. That was initial price. At the initial price offering. At some point, it went as low as 2 shillings and 50 cents for a number of years. And then it's been gradually going higher due to the earnings potential in the company up until close to 45 shillings thereabout. And then it has also, we've seen lows, at least over the course of this year, it has gone as low as 11 shillings and 50 cents. So the question is, it could have made sense for Vodacom, if you're looking at it, to buy at that point. If I'm somebody who wants to buy, you buy when it is at a low price, as opposed to at 45 shillings. From the perspective of somebody who's buying, I mean, it logically makes sense from that, but I'm not holding brief for Vodacom at this point in time. But now, the offer price that Vodacom was putting to the table was 34 shillings per share. Whereas in the market is at 28 shillings and 20 cents before the announcement. So there is a premium that was there, which is around 20.5% premium on the market price as at that point of the announcement. So the question is, will it have been easier for Vodacom to have bought this price, to have bought the 15% stake at the existing price, just basically going to the market and buying it at the prevailing price, or come out and say, okay, we want to, this is the offer that you have on the table, we want to buy it at 34 shillings. It will be, if by the time this transaction closes, because we still have a number of weeks, months ahead of us before this transaction closes, and say the price of Safaricom rallies to, say, hypothetically, 40 shillings per share. But now Vodacom is buying it at 34 shillings per share. So that is where you can say that, okay, if they're buying at 34 shillings, but it's trading at this Nairobi Securities Exchange at 40 shillings, that is where there's a discount for Vodacom's point. But right now, we are at a situation, assuming that the price remain as it is, but they are buying at 34 shillings. So already there's a premium on that. So it's a bit nuanced if you look at it, but looking at even the analysts who look at Safaricom, the analysts whose main task is to look at the price of Safaricom, they're looking at it at pretty much, might not be far off from where it's trading at 28 shillings thereabout. So I haven't seen prices as high as 70 shillings that we are hearing from political...
But are you persuaded that the value of Safaricom to the Kenyan public is worth more than the share price?
It depends. How does it depend? Because if you look at before you come to the value of the company, first of all, you need to look at the cash flows that you'll be able to get from that business, and then discounting it at this point. So typically, how analysts look at it is like, this is the dividends that I'll be able to get from the business, and say, assuming in 10 years or 5 years that the business is being sold, and then discounting it at this point in time. So that is how typically analysts who look at any stock or any company, they derive the value of that. So that is now the typical value of that. So looking at hypothetically, say at a price of, say, 40 shillings, and now it's trading at 28 shillings. So it means that what the valuation speaks to is that there's still room for investors to be able to capture much more value from this company, assuming that if I do my valuation in terms of the future prospects, be it dividends, be it the future potential that will come from this business, this is what I'll be able to accrue as an investor. So it comes to prospects of the company. We've seen that even the earnings drivers, M-Pesa, fiber, not much more the traditional sending messages and calls. So they have diversified their cash streams, their cash flow streams. They have also entered into a different market. This is Ethiopia. So looking at all that, that is how people now come to, okay, this is the fair value price of Safaricom. So if it was trading at the beginning of this year, 11 shillings and 90 cents, right now it has gone to 28 shillings as it is. So we are seeing that over the last, in the course of this year, the price of Safaricom has close to tripled from the lows that we were in at the beginning, sometime earlier this year. So what does it speaks to? It speaks to, even you've seen the results being announced, the full year results that were announced end of March, around May thereabout. We've seen even the first half numbers that were announced early last month. So market is adjusting to the information that is coming and sort of looking at, okay, what is the earnings potential that is coming from this company?
Let's listen to the Cabinet Secretary as he spoke about the other question about getting dividends in advance at 40.2 billion shillings. Was it 40.2 or 40.02? Let's listen to the Cabinet Secretary.
Details are going to be communicated very clearly on this matter. In fact, before we progress, there will be full disclosure. So you will get the full disclosure of how this 40 billion is arrived at. But I would tell you it is a good deal.
It's a good deal.
We are getting money in advance. In fact, the time value of money, if we were to look at the time value of money as an accountant, I would tell you it is more beneficial to get dividend upfront. Okay. I wish we could even get dividends for 30, 40 years in advance. Then we would put in National Infrastructure Fund and Sovereign Wealth Fund, and we would do most of our infrastructure projects, and our economy would expand.
Right, so that was Thursday night. The following day, it emerged a document of Vodacom communicating to the JSE, Johannesburg Stock Exchange, that indicated that actually we were receiving 40.2 billion shillings at the price of 55 billion shillings. And shortly after, the Cabinet Secretary began to explain how that transaction, or rather how that negotiation was done. And now we are hearing about annualized rate of return at 5.6%. Sheila, well, unfortunately, people are talking about, is it a good deal, is it a bad deal? But obviously, there's a cost to receiving advanced dividends. Some are calling it the government of Kenya inafuliza. How should we look at this in terms of returns in advance?
Thank you, Sam. I think now the war between the CS and economists is just getting started. I think this is the difference. Like I said before, I think accountants do postmortem and economists set the pace. And the stage where we are in this transaction is requiring a bit more strategic thinking than anything else. So when the CS was talking about, oh, it is better to get dividends now, I think that really is subjective. It depends on what we are discussing. I was going through dividends that with the 35% of shares that we've had. Yep. So in the business account of 2021, we got 17 billion. Business account 2022, we got 7 billion, and this is a time when the expansion into Ethiopia was going on. Then in 2023, jumped back again up to 17 billion in dividends. So now it's a strategic question of trying to ask yourself, because you're forfeiting this 17 billion, potentially more, potentially less, as we've seen, in order to receive a steep discount, actually, because it's 40.2. So there's about, what, 15.5 billion that you are forfeiting because you need cash now. And that's why, for me, it points down to, we can argue back and forth about whether or not that makes sense or doesn't make sense, mathematically speaking. But the question is, strategically speaking, is this what we want to be doing right now? We are taking this money, where is it going to? And what will it be used for? And what ROI, what rate of, return on investment are we going to receive on this? So, for example, you build a road. I think you quite well explained that, we're building this road. Have we thought about it and calculated that, as opposed to forfeiting, the 17 billion that we would have gotten this year, what would building this road give us as return, and how long would this take? Because all of these are just strategic decisions that we can make. There's dams. That means we're working on, production of power. How long will this take? How much will this make? I think that's the part of the conversation that I'm not seeing enough of. I would like to see a conversation that says it is important for us now to fuliza, because when we fuliza and then we go and invest it into this kind of infrastructure, literally in 5 years or in 3 years from now, we are going to be able to get a return that is worth much more than we fulized. So for me, it boils down to a very strategic decision that we need to be making. I mean, we have seen countries before with several examples that they have come in, they have made ghost infrastructure projects. You've built a beautiful airport or a beautiful bridge somewhere that then does not return, you don't get any returns out of it. We've also seen quite the opposite, where you have countries that have done incredible infrastructure projects that have actually gone in to boost the economy, and it has worked out quite well. So how do we then understand that it is important for us to be fulizing now? Why is it important that we get rid of, future dividends? Because we're investing in this infrastructure project? Are they political decisions? Are they business decisions? And et cetera, et cetera. So yes, again, I mean, respectfully, you don't just say it's better to sell your dividends now. I mean, there's no urgency here. When you invest, because what the CS is simply doing is, let's sell your potential or your future for now. And the question is, but why? What is the urgency for us to sell it now? So again, Sam, the stage of the transaction where we are in, usually, this is not where we call the accountants. This is where we still deal with the economists. And then the accountants will come in once we're looking at the nitty-gritties of the transaction.
But you see, the accountant is the CS for economic planning.
That's why, maybe, I think it's true. Maybe he was talking about the economists at the minute. Because...
Okay. All right. Let us also listen to the Cabinet Secretary talking